Oh yes, I want us to do a quick backtest of scenarios where we are price seems to be ranging. We can see that the market was expanding in this phase, but want to identify how price how we can read price inside these zones whereby we have consolidations, and how can we have avoid scenarios like this. So at this point I want us to look over price before that, and with this I guess this was on Tuesday. We had Monday, so I'll also replay that so that we get to see this last week how actually price happened. So yeah, this week is what I will try to backtest and see in these kinds of scenarios how can we read price better, and how can we avoid consolidation price actions. So at this moment we can see um, that price had formed this fair value gap. We had this push high into this fair value gap, and what we want to see is this fair value gap do its job by pushing price towards this low, right? That's the function of a fair value gap. You can see this fair value gap did its job pushing prices towards this high. Also, if we have another fair value gap, this wasn't actually traded into, and if I all right, let's clear everything. All right, want to identify this fair value gap did its job pushing prices above this high, and also this fair value gap did its job finally by pushing prices above those highs that were formed. So that's the work of a fair value gap. It should catapult price towards a low, and at this moment in time we have that fair value gap that has been traded into, and at this moment in time what personally I want to see is prices are dropping towards this low. We had the first week drop, these are the second week, then the third week pushed, swept all the liquidities. Those who were in a short position earlier on, they were taken out at that moment in time, with these candle pushing higher, because as for me, this week I would have really anticipated a drop of lower, but what price did is we pushed higher, and you can see we rejected later on. Then the next week we closed bearish, with the closure being bearish, and seeing that we are in a bearish trend of that bearish fair value gap. Then to me, I'm more of favoring downside, and the first target I will be targeting will be that low. Remember, hindsight, we know that the market is consolidating, right? But whenever we are trading, or whenever we are trading, we actually don't know whether that will play, whether that will happen, whether we'll be consolidating. What we know is we need to develop our buyers, and we need actually to follow the plan and do it. So what happened is we want to see the market drop. This will be the first target. Then we have this rejection block finally before we reach the fair value gap, and if in case the market reverses, this will be the first target, and obvious we can shift on to the next target. But with that, I guess it's a nice range from this point in time to this high. We can get a trading opportunity if the market reverses. So from the weekly, we have marked up that, and either way want to now develop a context area of which, if the market is bearish, from which level can we drop off of. So we have I usually use what we call a fair value gap. A fair value gap is a gap left open like this, whereby candle number one's high, candle number three, if we have candle 1, 2, 3, you can see that the high of candle number one isn't overlapping with the low of candle number 3. A situation like this, uh, the high of candle, this candle number 1, and the low of candle number 3, if you count 1, 2, 3, you can see the high and the low are overlapping. We don't have a fair value gap, but in a scenario whereby we have an overlap, we refer to this as a fair value gap. We have another scenario over here, a fair value gap. We have another scenario like this, a fair value gap. But also we don't have a fair value gap, we have a small fair value gap at that moment in time. But whenever we don't have let's first have this drawn so that we may talk all right. I guess if I align, everything should be aligned. There we go. So we have that immediate rebalance, possible immediate rebalance, and the scenario I will be wanting to see is a scenario like this, where we don't form a fair value gap and the market expands either higher or lower. So a scenario like this, an overlap where candle one, assuming these all right, yeah, I think, yeah, we have candle number 1, 2 and 3. We have the overlap, then the market expanded higher. We overlapped immediately, then the market expanded higher, not forming a fair value gap. Over here we formed a fair value gap, and if we have another scenario, a bearish scenario, we formed a fair value gap because candle number 1, 2, 3 are not overlapping. But if we have candle number 1, 2, 3, we have an overlap, meaning we don't have a fair value gap. And sometimes whenever you have a fair value gap like this, it's a context area, but also I must mark up the immediate rebalance, because you can see in this case scenario we failed to tap into that immediate fair value gap, but we stung into the immediate rebalance and we drop lower, and that's how the market continued to drop lower. Also, another case scenario, we had a small fair value gap over there that wasn't actually traded, and many more. So back to this scenario where we were. Remember, how can I identify that the market is heading to either direction that we have determined, either higher or lower? We must identify a context or a narrative area of which, if the market stinks into this level and starts displacing lower, this is what I can target. But if the market stinks into this level, we are in close proximity, we start displacing higher, then these are the level I will be watching. After identifying that, now we want to align everything of the daily time frame. I don't know whether we'll have that. I think I made a mistake of quickly. All right, so that's what we have, and now we need to see what the daily is telling us and how can we navigate the consolidation condition. So at this point in time, what you can see is we have that fair value gap. This was on Friday. Remember, this immediate rebalance was confirmed at this moment in time. For now, hasn't really been traded into. What we see is we have that fair value gap that is overlapping there. We also have this other Friday, which swept the previous day's high. Major liquidity pool has been swept. You can see how the candle did close below the high. And now, if on Monday we see us sting into this and then we start displacing, then we can engage lower. And if we don't see that, then we can expect to see higher prices. So that's what we'll be watching for of the lower time frames, and possibly, I don't know, that was on let's see what the 4-hour has. This was on Sunday, December, meaning Monday 23rd December 2024. So I don't know. Okay, I'll take this back so that go to these. All right, we are Chrome. Right, let's see what the economic calendar actually had. Hopefully you guys read your Bibles. Yeah. All right, I was getting the summary of this Bible verse today. This is the chapter I read today. So okay, so we need a forex factory. I usually read my Bible, a chapter every day, so we need to go to December last year. All right, need to first move to December, and I guess that was during the holiday seasons, and I guess that's why we had the volatility being like that. And on 21st 23rd Monday, this was the Christmas week. We need to know that 25th the market wasn't actually trading. This is the economic calendar. Monday, President Trump was speaking, and then as of Tuesday we had red folder news, which yes, we can trade that, but at 2 p.m. New York time. Then on Tuesday, President Trump also speaks. Wednesday we had the Christmas. Then we came Thursday, and I guess was tradable also, and Friday. So after noticing that we have a holiday, remember we need to be very careful. Let's bring us what we had. Yeah, so we need to be very careful with the economic calendar having Trump speaking. So we need to be very careful, waiting for something to present that we want to see, right? Playing according to the plan, right? All right, there we go. On Sunday, we know that Monday is a tradable day, so we can try to see if we can have a setup. Remember, we are more of a bearish other than bullish. If the market disrespects this area, then we will be target that level. If the market respects this area and start displacing, what do I mean by respecting is start displacing with fair value gaps. We need to wait for fair value gaps to be confirmed. So this on Sunday, the market has already tapped into the immediate rebalance. So what we want to see is, can the market start displacing lower? Because on Sunday, as the market was trading, we had that sting. So with that, we play one candle, because I usually want to wait for the higher time frame confirmation, right? Break of structure, maybe going lower, then engage. As of now, this candle was a Monday 1 a.m. We've seen excuse me, we've seen the market sweeping those highs around the context area. We did reject. Now what we want to see the next candle is displace lower, create these bearish change in state of delivery, so that we may get to look for selling opportunities. Nice. So that has actually happened. The next candle expanded lower. With this expansion, that has led to closing below these fair value, this up close candle, after a sweep of liquidity also of these weekly. This was a weekly IR, right? I need to label it because sometimes I forget IR and I start looking for words. Right, should be at the top. All right, we have that weekly IR, whereby we have number one, sweep of liquidity. Number two, we have change in state of delivery going lower, and this fair value gap had already been mitigated when this candle tapped into it. So what we know is the market now might be bearish, and remember, whatever you're targeting is these lows. So want to see price displacing, but also of the 4-hour time frame, where is our possible context area to go lower? Because yes, the weekly context area is working. Someone can actually enter an aggressive trade. If you are aggressive, immediately this is confirmed. If you need to wait for fair value gap, we need to wait. But as of me, if someone was aggressive, could have taken the sell at that point, maybe the stops above those, and TP at that point in time, then wait to see how the market could have played. But as of me, right, this was scenario number one. We will check on it. So I'll push this back. which to me, I won't go aggressive. I want to have confirmations, and confirmations, I need to identify other context areas. So the next context area, we have these IR. The market might push higher, I know that. And then my this is my last line of defense. If I see the market even pushing towards this high, then my bias or my bearishness, I think, is very questionable. So also we have the change in state of delivery, that low, the change in state of delivery. And also we have this fair value area that has happened. We had a sweep of liquidity, price leg number one. We had one price leg from this low, this high, 2, and also 3. You can see a sweep of liquidity. So we have this fair value area confirmed there. Okay, so we have the fair value area, we have the change in state of delivery, and we have the immediate rebalance. So after identifying that, I need to drop onto the 1 hour time frame to see how price will react to that, expecting also to have that 4-hour fair value gap. So if I play 4 candles, 4 1-hour candles, and see really nothing, then I will be coming back to the 4-hour time frame to see if we have a possible fair value gap being confirmed. So we had the 4-hour fair value area. You can see price leg number 1, 2, and 3. After price swept those liquidities, so we want to see price reacting off this level. We have the fair value gap at that moment in time, sting into it. So I want to see price also displacing below these up close candles. So we play one more candle, consolidated with that 1-hour candle, then we dropped below. So after seeing that drop, damn, so after identifying that drop, so what I could have actually done with this position is, I know we have 2 other more candles before the market rally lower, right? So I need, with this displacement, now we have new context areas, which are these 1-hour fair value area, right? We have the 1-hour fair value area, and maybe slightly above it we have the immediate rebalance. So after identifying that drop lower, I usually drop onto the 15 minutes time frame or the 30 minutes time frame and try to observe what the market is actually doing. So at that moment in time, at the 15 minutes fair value gap, what we noticed is price after price displays, we consolidated, we dropped, creating a change in state of delivery. So at this moment, could I have taken a trade position after seeing the change in state of delivery with no fair value gap? Yeah, it's likely I would have taken that. Let's see how the 30 minutes time frame is. I'm assuming, I don't know whether we are in a consolidation, want to trade how I would have traded in those conditions. So the 30 minutes also, we can see we created an immediate rebalance, then displaced lower. So at that moment in time, what I could have actually done, immediately that candle had closed, then I would have taken a short position. So immediately I seen this candle close at that point in time, then where should be my stops? My stops, so where my stops could have been around this point. Let's see whether we have 15 minutes swing points or 1-hour swing points. Or above that 1-hour up close candle, I think that is ideal and obvious. We'll be targeting a 1 to 2. So has the plan been actually followed in this case scenario, right? we had the sweep reaction of the weekly context area. We have seen the 4-hour displacement. We haven't really seen the 4-hour fair value gap being formed, but what you can see is of that weekly, we have 1-hour fair value gaps that led to other fair value gaps, of which the market reversed, created a change in state of delivery, and at that point in time, I guess was ideal for me to take a trade. Yeah, I could have maybe given an allowance to see price staying into these staying into the fair value area, then drop lower. But if we play it out, the market immediately pushed back, which wasn't a good sign. And immediately we'd seen that displacement, I guess, knowing that we have a possible 4-hour fair value gap slightly above it, then we are forming 15 minutes fair value gap, it will have been ideal to close off the trade. So we have played the third candle of the third candle of 4 hour, the third candle, right? We played the first and second 1-hour candles. Remember, 1-hour candles make up one candle, one 4-hour candle, right? So because we're in the 15 minutes, I will play 4 more candlesticks to confirm the 1-hour candle closure, right? So at this moment in time, I wouldn't really have waited to see this SL being hit. I could have actually taken out everything at this moment in time, because we are confirming fair value gaps. We are also disrespecting this kind of fair value area. So if we play 1, price dropped, 2, back into the FEG, 3, so yeah, 3, 4, so price dropped again lower, which was nice, but I would have been off the trade. Let's see what the 1-hour would have done at that moment in time. All right, the 1-hour wouldn't have actually confirmed any fair value gap of this point in time, which is a red flag. If the market is really intending to push lower, we need to see some nice displacement with fair value gap. That ain't actually happening, but because we have already played out 4 1-hour candles, let's see how the 4-hour candle has actually confirmed itself. Yeah, now we have a fair value gap that has been confirmed, and now we can now try. Remember, this was the first aggressive trade, which would have been in profit, but which I usually don't take. But for me, the trade that I could have taken, I could have closed in a lose, I guess negative 0.5 R, so, or something like that. So what price did is we reacted into that fair value area, and then we displaced lower, closed below that moment in time, and now we have new context areas, which are the 4-hour fair value gap that has been confirmed. We have the 4-hour fair value gap that has been confirmed, and also we have these fair value immediate rebalance line. At that point, we have these IR, which sometimes I told you the market can react off that, and then we continue lower. So we'll be trying to look for my second position, final for Monday. Before I call it a day, I see whether we can have anything, because I closed that negative in a negative position, but what we are seeing is price is currently dropping, and want to see price reacting to that immediate rebalance. So we'll play 1-hour candle, and did we tap into that? We haven't really actually tapped into that, but we'll observe what the 15 minutes is doing, because I know at that moment in time price might spool going lower. So at the 15 minutes, what we're seeing is price hasn't really tapped into that, but we saw price reacting of the fair value gap, the 15 minutes fair value gap, and we are displacing lower, closing below up close candles. So at this moment in time, it will be a tricky situation, because we have that immediate. If we could have stung into that, then I could have be entered comfortably, but because now we haven't really done that, I think I will be patient with to see how the next candle opens. So I'll go back to the 15. 30 minutes looks also kind of bearish. You don't have a fair value overlapping with that zone. So what I'll do is play one more candle to see how price reacts. Then price pushed higher, which is kind of good sign. We're expecting price to push to this level, then watch what will happen. Then immediately price also didn't sting, then we drop lower, closing below this up close candle. These ain't clear, and also we have lots of liquidities being engineered at that moment in time, so we'll want to have substantial reason for me to look for a setup. So at this moment in time, I'm also waiting. Then price pushed higher, again pushed higher, consolidated within that moment. So at this moment, I'm just avoiding taking any trade until we see some displacement. And currently it's at 15. So at this moment, I could have maybe I'm out of the market, because at 3 p.m. New York time, I don't usually want to maybe looking for a setup. So at this moment, what you can see, price ranged within this zone, not giving us any trade setup. So for me, having this context area saved me from maybe seeing this fair value gap being traded into and the market displacing lower, and I could have entered at this moment, and I could have maybe been caught up with these consolidations. Then finally we saw the market displacing into the fair value gap, the IR, my context area. But what we're seeing, price is forming bullish fair value gaps, which is not a good sign for me to look for scenarios going higher. Then we have that gap where the market closes for 1 hour, and then we opened at 18. Then market continued to push higher, which is a good thing also. Remember, if this trade after maybe closing at this level, we rallied to break to our entry point again. Now we are rallying back. So if we go to the 1 hour time frame and try to monitor from there what is happening. All right, so that's the gap. The market stung into that IR. We didn't respect it, so there's no need to look for a position yet. We know we have a fair value gap at this point in time, so the market might rally to go higher to that point in time, maybe sting into it, then we react off it. We don't know. So at least we missed taking a trade at this point, another position at that point. And that's why it's always ideal for me to wait for confirmations, even though if it's the 1 hour, I can drop even to the 15, then try to look for an opportunity of there. So at this moment, I want us to stop at where the dotted line is. The market pushed higher, continued to push higher, and finally we can see that the market delivered to the fair value gap. If we can go back to the 4 hour, this trade, I think it's a minus 5R. We need to know that our first position, if I can record at this point, okay, we have Monday that was negative negative 0 point, maybe assume wasn't really, maybe assuming 0.6 RR loser, so it was a loser. All right, no. All right, so we have Monday negative 0.6 R, which is this to me, I wouldn't have actually taken it. Now we are back into the context area, right? Our second context area. After the first one failed, price pushed towards this fair value gap, and at that moment want to see this fair value gap doing its job and pushing prices towards these lows. So since that one has been finished with, we need to have this as our draw, and we need to see if that fair value gap does its job. If it fails, then we need to wait and see whether the market will be pushing towards this high, because we will be disrespecting this fair value area. If a fair value area is being disrespected, then we anticipate the liquidities above it being taken. All right, as we wait, so the market, what we need to see is displacements of that, and we need to see displacement with fair value gaps. So what we have, price currently is inside that fair value gap, and remember, if that one fails, we will target the liquidities resting above this place. So with that, we play, we had that 1 hour candle pushing lower, then we rejected higher. The next one of that fair value gap, kind of consolidating, okay, kind of consolidating of that fair value gap. Again, the market is pushing lower, and it's at 3 a.m. on Tuesday, 3 a.m. So remember, we saw on Tuesday was a tradable day, because also Trump was speaking, but we know the next day was on Christmas 25th. So actually, maybe we might not having the volatility in the market, but let's wait and see, because we're following a plan. So what we could have seen is the market had those the staying into that fair value gap, drop lower. If we check the 30 minutes, at that moment in time, did we form fair value gaps? We have fair value gaps displacing, or fair value gaps that are being respected. All right, at that moment in time of the 30 minutes, what you are seeing is that the market stung into it, dropped, pushed back, dropped. We don't really have nice fair value gaps to trade off of. Also from the 30 minutes, let's see what the 15 minutes has. All right, the 15 minutes also doesn't have nice displacements with fair value gaps. What you're seeing is displacement below bullish candles, and then want to see a fair value gap form, so we play one more candle. No fair value gap was confirmed, and since we have now seeing now the market maker sell model in play, we are creating that change instead of delivery has been confirmed by all these candles closing, a bearish candle closing below these up close candles, and also we have a market structure shift being confirmed of a key level. Then at this moment in time, I would have been convinced to take a trade at that moment, right? It's also a London session. I don't usually love to trade London, but this setup, I guess, to me is kind of ideal. And where can I have my stops? Above that, but we have this 15-minute swing high, so we'll have in that moment, at that point, and I want to risk to reward. Yeah, we have a 1 to 2, and if we watch 30 minutes, all right, the 30 minutes, what it has for us. Wait, it's loading. All right, what we're seeing is also price is displacing, right? So at that moment in time I can play, because also we have a 30 minutes change in state of delivery, market structure shift. Now we are assuming this the downside of the market maker sell model of that key level, the 4-hour fair value gap that was formed also after the market respected the weekly IR. What happened? Market dropped lower, the market pulled back to that fair value gap. You can see how the market want to usually see a sting into the fair value gap, then rejection if the market is indeed bearish, right? But with this case scenario where the market is actually expanding higher, I don't know what's that time, I guess 5 to 5:30. All right, we need to play one more candle. All right, so what we can see of the 30 minutes, we dropped, we formed a fair value gap, which is a nice thing to see. We've seen the market staying rapidly into that, and what we want to always to see is a rejection of that. But what happened is pushed heavily, then the next candle you can see it dropping. We need to see how the 1 hour is printing to have some clarity whether we can manage our trade or our position. So the 1 hour did confirm a fair value gap. What we did is we sprang into that fair value area that we were forming there. Remember, the market structure shift had been confirmed with this candle closing bearish, and now we want to go back to the 15. Someone calling me, let me pause. All right, so the 15 minutes actually played into that fair value gap that we formed, and now we are kind of displacing. What we want to see is displacement with fair value gaps going lower. If that doesn't happen, it's a huge red flag. We saw that candle consolidating at that moment, had nice displacement, consolidated again, pulled back to a break even. This is not a good sign of a good bearish trade, but we hold on, had that back to entry point. And at this moment in time, it's at 7 p.m. or 7 a.m. 7 a.m. New York time. Okay, that's cool. So with that position, management of it, I would have now trailed my stops towards these, because these at 8:45, and if we play one more candle, all right, at that, and see what the 30 minutes time frame is telling us, to see how can we manage this position. Should our stops be to break even, or should we still maintain my should I still maintain my stops? You can see we are a whole lot consolidating, going lower. So at this moment in time, with seeing new swing points being formed, we have this new swing point. I can even push my SL towards that point, but let's observe the 1 hour. All right, the 1 hour not really confirming any swing points. What we are seeing is red flags with the market sweeping lows and then rejecting. That's a red flag. So with this, I want to manage my stops, maybe to reduce the risk a bit. All right, what I should do is this SL should be triggered to this point in time, because we had it's a 1 to 2 whenever we are triggering it. All right, I guess that 0.5 are reduced, so we play back to that moment, and now back to entry point, rejection lower, that high still maintaining, price pushed lower, again consolidated at that moment, pulled back, we don't have any fair value gap, consolidated, pulled back. It's taking too long, the market is taking too long before hitting our TP, yet we are moving from our context area to this given direction. And remember, finally want to see it deliver towards these, damn, I've moved the lows. I think these lows were that moment. We want to see price deliver towards these lows, but what we're seeing is the market currently rejecting, consolidating a lot, pull back. I guess at this moment I could have reduced also my stops. Immediately I saw this displacement, my stops would have been at break even. At this moment in time, I would have been taken out. Then what you can see, the market rallied higher back, right? If you go back to the 1 hour, back to our break even, or if I could have not moved the stops, then that would have been a negative something also RR. So you can see market was going bearish, but we shifted bullish again. With this shift wasn't really ideal, that's why this position, I guess, to me would have closed break even. So on Tuesday, equals BE. All right, Tuesday we have a break even, because this position would have well been managed, but at this moment we didn't really hit that. Price wasn't respecting these two, because a fair value gap should do its job and push prices towards these lows, but that didn't happen. What you're seeing is now bullish fair value gaps being formed. At that moment in time, want to go back to the 4-hour time frame and see what the market was actually are telling us. As of the 4-hour time frame, what we can see, the market didn't displace of that. We had this nice reaction, but didn't continue towards these lows, came in close proximity, and then we were forming bullish engulfing candles. So that position SL has been, break even has been hit, and now want to see what the market has for us. So this is Tuesday 9 a.m. The candle swept the previous candle's low, then closed bullish above the opening and the closing price of the previous candle. Seeing that, and knowing that price has already reacted, respected this fair value area, if the market should show signs to go higher, we need maybe to see these highs being taken. But how can we engage going higher? We need also to identify the context area, right? The context area to monitor if price is intending to go higher and then lower. So we have that immediate rebalance line, which also happens to be the previous 4-hour candle high that was swept. So want to see how will price react to this level. If price reacts bullish, then we can expect a price pushing towards this high, and then if we displace above that with fair value gaps, we can expect to see the fair value area high being taken. So at this moment in time, we can see a sweep of these candles low, forming a bullish engulfing candle. And with a bullish engulfing candle, what I usually do is use my gun box to divide these into 4 equal parts, this candle, there we go. And if you are bullish, I want to see either a reaction of the 0.5 to 0.25 level, which is overlapping with the closure, which is absolute that when the next candle we will be definitely sticking into that, and then see how price will be reacting to that level. And since it's earlier on during the New York session, and I think possibly what could have happened is the first trade, to me, I wouldn't really have taken it because I don't usually love to trade a London session, so I love during the New York. So at this moment in time, we have that fair value gap, which is overlapping with the 0.5 level. Want to see how price will be reacting to that, and will this fair value gap do its job and push prices higher, or it will be disrespected, then price will continue towards these lows. So with that, price thinks into that, and we are seeing bullish rejection going higher. So with that bullish rejection, also never really tapped into that 0.5 level. I would like to drop onto the 15 minutes time frame to see the reaction. All right, there we have it. So what we want to see is displacements going higher and a closure above these 3 consecutive down close candles to engage in price going higher. Then the next candle, I don't know, we had an open, or this is the break, so I would have been out at that moment in time. And then so at this point in time, I wouldn't actually be trying to look for a position, but price has closed above the consecutive down close candles, forming fair value gaps. So what I could have anticipated is to see higher gold towards these liquidities there, or to that fair value gap. We have tapped into that fair value gap. Now price displaced to that point in time, and also currently we are respecting these 4-hour IR that the market's turning into it, and now we are displacing higher into that 4-hour fair value gap. With saying that, if we go to the 1-hour time frame, because as of that's Tuesday, and also now we are heading to Christmas, whereby I don't think whether the market traded during that period of time. What we saw off the 0.25 level and the 1-hour fair value gap, price pushed higher towards that target, respecting these 4-hour immediate rebalance, or the IR. Now we want to see how the 4-hour candle closed. We pushed higher, and now since we are disrespecting that fair value area, I think this was on Wednesday. Again, you can see on Wednesday we didn't really have major price moves. The market opened on Wednesday 18th, and that's when, meaning as of the whole Wednesday, from Tuesday 00 to Wednesday 00 to 18 to Wednesday 6 p.m. the market didn't trade. Then we opened and the market displaced higher, and we kind of disrespected these bullish bearish fair value gap. And now what we want to see is these liquidities being taken, the highs being taken, and this is on Wednesday. So we need to find all right, okay, so we need to go back to the daily, because I think I've messed up, and because this was the time frame we had: Tuesday, Thursday. All right, All right, so at that moment in time, if we go back to the 4-hour time frame, we had already identified our context area, and we had that bullish engulfing candle was confirmed. We had a consolidation next 4-hour candle. Then the market on Thursday we disrespecting this gap, this fair value gap. Now what we want to see is these liquidities being taken. So identifying that we have these liquidities that we can target. So I'll shift these. I'll shift that. That is what that's what I'm targeting after seeing this fair value area being disrespected. And now we have a market structure shift. You also have a change in state of delivery, change of character, or market structure shift. It is respecting also bullish bearish fair value gaps. Now this is my target, and from where should I be reacting off of? So I will use this fair value area as my context area. If the market will be showing bullishness, and I want to see how price reacts to that level. But is it possible that we see price deliver deep into this area, or the next candle will open and take those liquidities? So with that, I need to drop onto the 1-hour time frame, because to me it's really unlikely. Really unlikely with that push. Is it likely we might see price deliver to this fair value area? Not really. So what we want to see is we have a fair value gap around this area also, which is ideal. But also, could we see price drop to this? So identifying that, I need to monitor how the 15 minutes will be doing. How will the 15 minutes react? All right, I'll move the scale. All right, here we have so the 15 minutes also having fair value gaps. If we see price maybe drop into one of these fair value gaps or these, and then we displace above this high, then we can expect the market to rally to that high. But also we might have a missed opportunity where the market just rallies towards those high. We play consolidated a little bit on Wednesday. Remember, the market will be closing at around 23, so that we go back to the daily time frame and see what the market will be doing. So consolidated at that moment, then pushed. We'll wait for the 4-hour for the daily to close. But what we're seeing currently is the market didn't even tap into that fair value gap, this 15 minutes fair value gap. This moment we didn't really tap into it. The market has expanded above those highs. Can we see price deliver towards those highs before the day closes? The market reversed lower, which is expected, because sometimes, yes, we have displacement above highs, but the context areas are left open. Price moves from a given level towards a given direction. So with that, we pushed again back, consolidated at that moment, and finally, if we go back to the daily and see how Wednesday closed, I don't think Wednesday we have had a trade. Is this Wednesday? Yeah, Tuesday we had a break-even trade, but as of Wednesday, during the Christmas, we didn't have anything. But on Thursday, because we will not be having Wednesday, so on Thursday, what do we really want to see at this moment in time? We'll be favoring bearishness, right? Because with this candle after sweeping those highs, so as of Tuesday, I guess the market could have been bearish, but later on that's when we'll identify if the market was to be bullish. So I don't want to play Thursday, right? Okay, so at that moment in time, Thursday has already been confirmed. If we play Thursday, then we will know what will have happened, and I don't want us to know. Since we have confirmed that fair value gap, now we have a clean context area, which will be now this fair value gap. Expecting the market to push higher, and we'll watch for a reaction of the 1 hour time frame, expecting higher prices towards the fair value areas high, right? So yes, so we need to see a thing into the fair value gap, which happened, and at this moment in time want to see candle closing above these consecutive down close candles. This one didn't happen. We rallied deeper. Want to see an up close candle closing above there for us to be bullish. We rallied, we didn't really close. I need to see, because we are in close proximity towards that, and we have these 4-hour context area, and also price seems to have created a bullish change in state of delivery by slightly closing above the consecutive down close candles. You can see we have the consecutive down close candles. This closed above that, which is a sign, but with that rejection, not really a good sign, meaning we need more confirmations if we need to be bullish. So with that, we want to see 15 minutes of displacing higher. If that won't happen again, we want to see it also off the 15 minutes time frame. What we are seeing into a key level, we accept those liquidities. We have bearish fair value gaps that are being disrespected. We have bullish fair value gaps that are being respected. So at this moment in time, personally, what would have done, because this candle has closed above these 15 minutes fair value gap, so I will have taken a position at that moment in time, so a long position. Immediately the candle closes, and then where should I have had my stops? Below, slightly below the 15 minutes, and then see whether we could have a 1 to 2. All right, at that moment in time, and then we had a price into the drawdown, then again rejected, again deep into drawdown. Now we are seeing this fair value gap kinda being disrespected, but again market pulled back to break even, and I don't know, the 1 hour we have 15. If we check on the 30 minutes time frame to see the reaction of price, yeah, we are consolidating, not actually forming fair value gaps, but 30 minutes not clean enough for that buy nor sell, but off a bullish fair value gap, we have a clear target. So I think it's one to hold. So we did from the 1 hour reject nicely, right? So let's see, then we pushed higher nicely, pulled back again, which is not nice, by to the break even. Then with the next candle, our SL was hit, then the market rejected. So this was on Thursday. This was on Thursday, earlier on during 7 a.m. So on Thursday, if we have our record, Wednesday we didn't actually trade due to the, no, it was on Thursday. So at this point we have minus one error. Following the plan, but results not coming up. All right, then the market displays, we swept all the liquidities back into that 4-hour fair value gap, into these around the immediate the fair value area, the 4-hour fair value area. And what we could have maybe learned from this position is whenever the market is either way, right, bullish or bearish, right, because as of this moment we were bearish, but as of this time we were bullish, seeing bullish fair value gap, bearish fair value gaps not doing their job. You can see this bearish fair value gap didn't do its job towards this, and it was disrespected. This is a clear sign of that the market is in a ranging condition, because fair value gap should do its job. If it's a bearish fair value gap, I think to clear these lows. If it's a bullish fair value gap, I think into it to clear these highs that are there, the opposing targets. But in this condition, we could have maybe waited for, we need to have displacements, right, with fair value gaps, clear displacements like this. That's what you could have expected to see if the market is really bullish. But also we followed the plan. We wanted to see displacement with fair value gap. We entered off one from the 15 minutes time frame, but the results aren't actually matching, or aren't giving us what we want. So the next one, deep into that again, we pulled back sharply, and then the market delivered to the target which we anticipated. So we were taken out, right? If we can go to the 15 minutes time frame, possibly see what happened. All right, the market pulled back sharply, pulled back again with this movement, then rally lower, swept all those liquidities and also these other liquidities, which were the London lows during the New York time. Then the market expanded, going higher. Now we had these fair value gaps that were being respected. Now this is where we maybe another trade, an ideal trade could have happened, but also this one we entered after the market had displaced these above that fair value gap. The market could have rallied, maybe because it was not yet time. That's why I usually hate the London session. You can see this trade was taken around the London session, but the real move, when we saw price push higher, we dropped again lower. So a place I could have entered maybe and then taken a loss was during the New York session, after the market had displaced above these consecutive down close candles. And always whenever the market does this on the lower time frame, I don't usually love it compared to when the higher time frame creates a change in state of delivery, because at this moment you can see we had that change in state of delivery confirmed. Then the market dropped again sharply, swept the liquidities, the major liquidity pools, because this was London lows. We swept the London lows, then the market again started displacing, going higher. So with this candle and seeing at this point in time when the market was displacing, I guess this was the ideal position. So -1R as of Thursday earlier on, avoiding the London session. So that has been recorded. Now trying to see whether we can rescue our week on Friday, but the final target was actually met, but didn't capitalize on that. If we monitor or watch on the 4-hour, with this trade, what I can learn from it, or what I can take from it, just avoid London session. That's why I usually love trading only in New York session. So of the 4-hour fair value gap, what we saw is the market pushed higher towards that target back into the weekly IR. So we can clear this. And now as of Friday, what are we expecting? This has been taken, that the new liquidities are resting above this point now if we need to be bullish. And we have a sweep of those liquidities, which is not really ideal, but also we have the change in state of delivery being confirmed of the 4-hour time frame, because this candle did close above the down close candle of this fair value gap. And also this long-term change in state of delivery being confirmed, so kind of bullish. And also, since we are back to a level that had been respected earlier on, right, we had these weekly fair value immediate rebalance being respected at this point. Now we are trading back into it. If we trade back into it, what you can expect now is to see, because this, remember this level, we were watching to see how price reacts to it. If we form displacements with fair value gaps going lower, we engage towards this low. If we form this displacement with fair value gaps going higher, we engage with price going this high. We don't actually have that fair value gap being confirmed at the moment, but what we can see is we are back into that range that had been respected, meaning we are disrespecting it currently, because a key level should only be utilized once. So at this moment in time, I will be leaning more of bullish. And what can be should be my context area, I have that 4-hour IR, of which I will be watching how price of the lower time frame reacts to it. And then if we were bullish, I will engage first towards those highs, and then later on we have these highs, the fair value, the weekly high that we have been talking about. So back to the 1 hour to watch displacements with fair value gap. Currently no winning trade for this week, and that's how messy consolidation price action is always. So what happened? Price pushed higher, then we dropped again sharply, which is not ideal. What we want to see is displacements above these immediate rebalance to go higher to first this target, then watch how price will deliver towards that if you are bullish. So play one more. Price did respect that. We have displaced higher. Okay, with after this candle had been confirmed. Oh no, wanted to, yeah, with this candle being confirmed bullish, then I would have dropped onto the 15 minutes time frame. Now knowing that we are at the 4-hour immediate rebalance, which is my context area, of which I want to see reactions going higher. And do we have displacements with fair value gap? Yes, we have that fair value gap being formed there. And also if we watch the 30 minutes, all right, 30 minutes also formed a bullish fair value gap, of which we are disrespecting all these bearish fair value gap. So at this moment in time, yes, I would be watching for price of this level to react bullish, then first target, then later on we can expect to see higher prices towards those highs that we have mentioned about. So with this, need the 15 minutes to confirm to me we are heading higher of that 30 minutes fair value gap. Also, I should have marked at the 1-hour IR, if any. We have the 1-hour IR at this moment. At that point, yeah, so those are the two levels I will be watching If the market rallies deeper into them, then I'm off buys. But now we have lots of pinks. So this is the 1 hour IR, this is the 4 hour IR, this is the 30 minutes fair value gap, and this is the weekly IR, right? The weekly IR, it's lost. Okay, we have the 4 hour IR, we have the 1 hour IR, and the 30 minutes. So with that, want to see how price, but I will be more of favoring the 30 minutes fair value gap. Want to see us sting into it, then price displays above this high, then I will engage in bullish prices. So I play market dropped, which is nice, into the 30 minutes fair value gap. Want to see reactions above this maybe high to engage. So that we had a nice displacement above these high the close of these candles, but I want to see above this or a fair value gap being formed. So we formed that bullish fair value gap of the 30 minutes fair value gap, so a sign that we might push higher. So at this moment in time, I'm learning in consolidation moments, maybe wait for price to sting. Then we didn't even have that fair value gap. Price didn't actually yeah, am I asleep? We haven't seen the fair value gap being formed, so which is not ideal. Want to see displacement with fair value gaps, right? Then we pushed higher, then consolidated going higher. No fair value gap is formed of this level. We are now sweeping this other than running, but if we have a candle closing above it, then I will look for an opportunity to go long. That didn't happen. The market dropped again, which is a sign of when we are not forming fair value gaps, the market tends to sweep highs and then drop back. We are dropping now, forming bearish fair value gap. This is on Thursday 15. Play one more candle. What you're seeing, we are now forming bearish fair value gaps and not a bullish fair value gap that we anticipated of these 30 minutes fair value gap. And now, because want to see how the next 1 hour candle closed. What we can see is 1 hour had closed bullish, the next hour bearish. We have the 1 hour fair value gap. Now we can shift, because we didn't take that position of the 30 minutes fair value gap due to not seeing 15 minutes displacement above. We now have a new clear context area, which is the 1 hour fair value gap. Could we have a sting into it, then we push higher because we are reacting off the 4 hour IR. Now go back to the 15, and that's how choppy price action is when we are ranging. A good example is this week, the final week of February 2025, which to me hasn't really been easy. That has made me to even go back test whenever we are ranging, and how we can avoid that. So over here, fair value gaps being formed. This is the point where I will be trying to look for bullish prices. So price opened there, so I want to see displacements going higher, right? But what if we fail? Then if we fail, we have this 15 minutes fair value gap, then maybe this liquidity is resting below. And now before 23, want to see, yeah, so what we saw, market has tapped into that 1 hour fair value gap. Want to see displacements going higher. We pushed higher but didn't displace. The next candle dropped back into that range. Okay, consolidated again, and remember 23 we're gonna be going to, right? Yeah, we dropped lower into now the 15 minutes fair value gap. We pushed higher off that back into the 4-hour IR, which was respected, right? Whenever a key level was respected at this moment in time, what we don't want usually to see, or I don't want to see, is maybe market reversing back to it, because most of the time the opposite will happen. So we can also tend to see these liquidities being grabbed, but as of now still bullish, because we are around that key level, the 1-hour fair value gap. If we don't see displacement, then we are off. I can't take sales. I will not be taking sales. The market reversed again. Let's see, pushed back. You can see lots of consolidation, market pushing back, pushing lower, so giving choppy prices. Even if you are in a sell, you are so terrified, right? So these are conditions that to avoid. And how can you identify these types of conditions? Is by, if a bearish fair value gap is not doing its job, maybe towards a swing low, then it becomes displaced, then the fair value gap doesn't actually do its job. Those are signs of consolidations. And just close. What I'm learning is I will be trying to close trading, maybe use a trade locker. Yeah, avoid that week. So what we can see, market did drop. Yes, we said if this fair value gap is disrespected and this area isn't respected, we want to see price deliver towards that close. Then now we are seeing prices pushing now again higher. All right, want to see, we formed a fair value gap. Will that fair value gap lead to another fair value gap? Hasn't really been traded into. Then pushed higher, consolidated, one more candle. Yeah, then another drop. You can see price isn't really moving. Once a key level is starting to want to see it deliver towards the intended direction. But if it fails, if key levels fail, maybe we want to see a reaction of the 1-hour fair value gap, but it fails, then just know those conditions ain't ideal. So the 1-hour 15 minutes has been so choppy due to the consolidations. And the 1-hour, you can see we had disrespected the 1-hour fair value gap, rallied back to that zone, consolidated, we pushed back, wicking a lot. And now finally Thursday, if we can go back to the 4-hour maybe. So on Thursday also we couldn't have formed a trade. So Thursday we had -1R, yeah, earlier on. So if I would have avoided London session and traded New York, then that -1R would have been avoided. So as of Thursday, price was ranging around that context area, the immediate rebalance. So if we get to the 4-hour to the daily and see how Thursday printed out, you can see Thursday was bullish. We had disrespected this zone. We had this fair value gap didn't do its job to push prices towards these lows. Now we have kind of disrespected it, because this current candle did close slightly above the fair value gap. And if we did disrespect that, then remember this was our context area with that weekly immediate rebalance that was at these lows. So we had the weekly IR. You see how price action, whenever we are ranging, ain't that deal. It did make my confidence even go down. I'm fearing even taking a trade, because for me this week I've lost a huge massive maybe percentage. For minus 4R, minus 4%. Guys, if I've just stopped and I want to wait until next week. So at this moment in time, what we can see is price has created that change in state of delivery. We are disrespecting this zone, which we were saying if price disrespects, then we want to see these highs being taken. So as of now, Thursday closed so bullish. What can be our context area? We have these I want to get rid of many lines there. So we want to get rid of that. And if you are really bullish, because we are disrespecting the weekly the IR, so this will be my new context area, the fair value area. At that moment in time, we have the candle slightly closing above it and also drop to the 4-hour time frame. Is it likely that we might be dropping to the immediate rebalance? I also need to mark the immediate rebalance. At that point, so we have the IR, we have the fair value area, we have the IR. This is the first direction, and then the final, the weekly highs. So as of Friday, can we have that expansion going higher to maybe clear up the messy week? Is it possible? So what we want to see is could really price drop towards this is the daily IR, but also we have this fair value area which seemingly will be kind of respected because the market will be closing below it. So what happened on Thursday, on Friday at around 1, I want to trade the New York session, so I will play the next candle because this 1 to 5 to 4, then the 5 to 8 a.m. candle, so I want to play it. All right, so at that moment in time, want to trade the New York session. What the market did is it dropped lower back into the fair value gap. We swept those liquidities back into the daily IR, right? Remember, since we had disrespected the weekly IR, wanted to see higher prices, but at this moment was the IR wasn't respected, the daily fair value area wasn't respected, and whenever a fair value area isn't respected, then we can anticipate to see the fair value area's low liquidities being taken. So at that moment, we are at a key level whereby we should be watching for bullish prices if I get rid of that fair value area, because what we are seeing is this fair value area is being disrespected, right? And whenever a fair value area is being disrespected, we want to see the lows being taken. Also this one, we have a small fair value area, 1 2 3, so we can have this as our first target if we couldn't really have proper reactions of this level. And it's aligning nicely with this bearish fair value area. At that point in time, we also have the immediate rebalance slightly above it. So oh no, okay, what I'll do, yeah, something like that. So since we are at a 50-50 price action, we need more confirmations, and whenever we are 50-50 at a key level whereby we are expecting bullish, also we are seeing fair value areas being disrespected and respected, right? A bearish fair value area currently is being respected. We have the immediate rebalance being respected. Now, should we trade in these conditions? So we try to identify if we are bearish, from what areas can we expect? We have this fair value area there, and also we have the immediate rebalance. And what could we target if we are bearish? We'll have our first target as these lows, right? We have our first target as those lows, and then our second target will be these lows below it. So we go back to the 1 hour to see how price reacts. All right, so price displays lower of this fair value gap. We had that fair value gap, price tapped into that, we reacted lower, and we can call this the market maker sell model in play. Maybe change instead of delivery fair value gaps being respected. So with the next candle, what should we anticipate? Maybe a fair value gap of which you want to see prices are dropping lower. So with that, want to drop maybe to the 15 minutes time frame, because instead of maybe waiting for the 1 hour candle might continue lower, or maybe want to see the next candle, maybe at this point in time wait for the next 1 hour candle to play. Maybe, yeah, we dropped lower, confirming that fair value gap. So my next context area, seeing now that price isn't reacting off this level, I will get rid of it because it was a bullish array. Now I want to target this original consolidation, right? We have this original consolidation to target as the liquidities for the market maker. All right, market maker sell model, as I've said, I've tabbed. So we had already played the 1 hour. No, why am I messing around? I don't want the 2 hour. Actually want the 1 hour, so that I may label the 1 hour fair value gap. So I want the 1 hour. We may label back the 1 hour fair value gap, then drop onto the lower time frame, yeah, and see whether price will react nicely. So we had that 1 hour fair value gap. I've seen, since I had played the 2 hour candle, the 2 hour time frame, and see we have one more candlestick, but this is the 1 hour fair value gap, of which I'm watching to see how price will be reacting off that, and can I engage towards these lows. So at this moment in time, it's around 10 a.m. New York time. So you can see that's what is happening as of today. So those are the current price actions. So we have this price, want to see us sticking to it, then displacement going lower because we are bearish. We haven't really tapped into it. Price pushed higher, haven't really tapped into it. We have now stuck into it, drop lower, want to see fair value gaps. Didn't we confirmed a small fair value gap there, and at what time is this? 12:45. We have that fair value gap. To play one more candle, so we have a fair value gap there that was confirmed. So if that fair value gap was to push prices towards this lows, we want to see a sting into it, then displacement lower. But what we cannot see is pull back higher, and now it seems we are heading back into that range. To observe the 1 hour time frame, that's how I usually go up and down, and you can see the same conditions are happening currently. Today I didn't trade these conditions, so the 1 hour has eventually tapped into that 1 hour fair value gap. Can we have an opportunity to sell? That's what we want to identify. All right, want to see now displacements of that going lower, and staying into that, dropping, no displacement, pull back again into the range, then the market sharply displaced of that. And at this moment in time, yes, you can have your position there, and at this moment in time, maybe because as of Friday, I want maybe to close off the week maybe at break even. So at this point, I will add a position there, and where should be my stops? Above those highs that swept the liquidities, and without even targeting a 1 to 2. I want to see how the market will react to that point. Even a 1 to 1 is still ideal because that's the target. But also we had that lower draw, maybe that one, maybe a 1 to 5. Let's see what the market could have done at that moment in time. This is around 15 p.m. Market dropped back into the fair value gap. Want to see that fair value gap displace prices lower. So with that, if we displace confirm, we have confirmed a fair value gap, which is not ideal. So how can I manage this position? I will maybe close half of the position. If I entered with maybe one lot, I should close maybe 0.25 at that moment. We consolidated, pull back, other than waiting for the whole SL to be hit. I should have closed at that moment, which could have made also another minus, assuming this could have been maybe three quarters minus 0.75, and then you can see that fair value gap didn't do its job. Price pulled back to the 1 hour fair value gap, then we continued higher, as you can see over there into that. I don't want to close. All right, because Friday has already closed. What you can see is okay, where is Friday? Where did Friday close? Okay, we were trading. Okay, at this moment in time, this minus 0.75 would have been confirmed, and that's how badly and angering we could have closed that week. And in consolidation weeks, you can see the whole week we haven't actually had any clean setup that would have maybe earned us profit. We are seeing something. We are seeing a key level of which we are watching price to react off of, but the market disrespects that or does totally the opposite, goes to a point where yes, it should go, or doesn't respect key levels, then the market later on displaces towards the intended direction. So you can see as of this one, finally the level was hit, but also what you can check, market was giving lots of fake outs, right? Lots of fake outs, then drops. So avoiding conditions like that is very key. Yes, you might be right, but the conditions towards maybe your target are so messy. Price retraces so deep, price sweeps you out, then continues to the right direction. But with this, I guess you can see with the stats that we have collected tonight on Friday, assuming we had maybe another minus 0.75 RR. So an accumulative for this week was 0.6 plus 0.7, that's 1.35 plus 1, so 2.35 RR for the week, right? Those are 4 stats for consolidation conditions. And now finally, want us to look for a week whereby we have a clear direction and try to see what the market would have actually done. So I will delete everything. So we have our minus 2.75, is it? Yeah, 2.35. So if we get rid of that and maybe play back and go to a week whereby price is kind of clear, there we go. So any random week at this moment in time, any random week, close my eyes and maybe sweep. All right. Okay, in this case scenario, what we are seeing is at this moment Monday 17th December. Okay, hopefully this is not a consolidation. This wasn't an actual consolidation week. Let's take a week maybe like this. Yeah, let's take a week like this. So what we are seeing is the market was ranging at this moment in time. Then we displaced through the range, we're forming fair value gaps. Also we displaced above, we confirmed a weekly market structure shift. And then this previous week, what we saw is we had formed that fair value gap and the market had this thing into it this week. And then this coming week, we know that now the market is in a bullish trend and we are likely to continue higher. So even though I know we are likely to continue higher, what I will mark up is if the market will be rallying lower, then this will be my first target, the weekly low. But knowing we are reacting also off a key level, which I will mark up, and if the market is rallying higher, this will be the first target and we might continue higher. Also, I will mark up the weekly fair value gap that the market has reacted off of. So we have that weekly fair value gap with that target. And yeah, that's what we have. And the context area, we have this fair value gap, which can act as our context because we had created the immediate rebalance. We closed at that moment in time. And since this first, the high of this candle and the next candle will be overlapping, will have a definite immediate rebalance. So with that, not much from the weekly, will be dropping to the daily. So of the daily, what you can see is we need to align things, being tidy. So this the weekly low over there that the market tapped in, after swept those liquidities, tapped into that, and now what you're seeing is price on Sunday from that fair value gap, but that ain't really ideal. This is the daily time frame, so should maybe get rid of, I don't know whether Sunday should be part of the game, but yeah, what we could see is on Friday we pushed lower, then we did reject higher. We'll also try to see, we had an immediate rebalance at this point. Why should price rally deep towards this high, towards this low, then reject? That's what we'll start with from the lower time frame. But with that, the daily hasn't really anything clear other than the rejection and the immediate rebalance of Friday. So the Friday immediate rebalance, which is there, as well as the daily fair value gap. But since it's Sunday, won't really mind about it. Maybe we'll come and see how price reacted to it. So want to see on Friday, why did price had to dig deeper, yet we on this was on damn. Oh, okay, maybe we had gone too far, whereby we couldn't be provided with the data. Was that 2023? Maybe that's why we had lots of candlesticks. Oh. Okay, so let's take a week that is close, assuming we had a week like this whereby it expanded nicely. Let's see how we would have anticipated that. Hopefully this is February 24th 2024. Could we be having no that data? We won't have that data. That's too far also. Let's anticipate a week like this, starting with a consolidation week like this also. All right, so this week what could have anticipated is we are expecting remember, the market did consolidate. We broke through those highs with this consolidation. Also, we have created this market structure shift. We are displacing off nicely with fair value gaps, and these fair value gaps confirms a fair value area. So first of all, we need to mark up if the market goes higher, our first target will be that high. Sure, that will be the high. Usually love black. And if the market is heading lower, that's the weekly low will be the first target. Then mark up possible context areas. We have the immediate fair value area that is currently being respected, because we'll use purple with that, because this candle tapped into it, rejected, going higher, so has been respected. But also we need to be mindful of this fair value gap below. Need to be mindful of that fair value gap below. So yes, the market has been bullish, though sometimes fair value gaps are not respected. In this case scenario, you can see a fair value gap was not respected. The market dropped. Many were expecting price to tap into this, but again price pulled back and we continued higher, dropped lower, swept the previous day's low, then we continued higher. So whenever we are trading in a day like this, so it's always good to monitor, right? We'll be talking about having context areas. So I will have also these IR being marked up there. I think I need to talk about it. Like if we have an IR at that point in time, why should the market rally deeper, sweep the previous day's low? You can see we had this fair value gap, but the market didn't rally. We swept only the previous day's low, then we rejected higher and rallied and swept, rallied, then the next candle rallied and swept that daily high. So sweeps, I use red. So before even this week, want to see price, why and how you could have avoided a loss if you are buying this week. So we had that weekly immediate rebalance, so we need to drop off to the daily time frame and see why price rallied deeper, swept that previous week's low, and then we can see the market then expanded higher. So at that moment in time, we had a fair value gap overlapping with that area, was nicely respected on a Friday, right? Then price I guess if we go to the 4-hour time frame, this rejection is always fair value gaps lower, fair value gaps higher. Then we could have anticipated a push of this level towards these targets. But if price again disrespects this zone, or doesn't, this fair value gap doesn't do its job, and we disrespect this area because it is qualifying to be a fair value area, because we had price leg number 1, we had 2, price leg number 3 again. If a fair value area is being disrespected, we can expect maybe to see its lows being swept. But at this point in time, we only swept the previous week's low, and then the market started pushing back higher late this week, right? And that's why it's so necessary for you to have a context area. So if Friday had closed at this moment in time, my context area would have been, if we go back to the 4-hour, now we are talking of other things. All right, it's good. That's good. We learn, man. All right, we're talking about this price action over here. So what price has done is we had staying into that. This was on Thursday. Price pushed higher on Thursday. Then what we saw on Friday, price pulled back into that fair value gap that was to be respected. And what we were seeing is bearish fair value gaps being formed on Friday. So what we could have wanted to see is an overlap of these bearish fair value gaps with the market forming bullish fair value gaps that disrespect this. But what happened from the 4-hour time frame is the market didn't respect that. The market displaced lower, and it was on Monday we swept the previous week's low. And at this moment, most guys, or most of the traders were now being bearish, but the market also wasn't doing its job, because this fair value gap should have led a rapid movement towards this low, and that's where we always need to wait for fair value gaps. So at this moment, Tuesday didn't actually form any fair displacement, and then on Wednesday we had that shallow pullback, a drop with fair value gaps. And I guess at this moment in time, if we go back to the daily, we could have formed IRs that all right, at this point in time, because Monday has already swept these lows, now we want to see also the next context area, which is this 4-hour IR, to push price lower, maybe towards these lows. And then what happened is, yes, price dropped, and then this next day dropped, but we were not displacing. The good thing is, if the lower time frame isn't actually displacing with fair value gaps, is a huge red flags. So that's why it's really critical to wait until you see fair value gaps and then try to engage. So at this moment in time, what we had seen is no fair value gap as the market was going lower, because that wasn't the real intention. We were consolidating, wicking a lot as the market was moving lower. But when the market now was bullish, what we could see is now price was displacing with fair value gaps, disrespecting bearish fair value gaps. So fair value gaps are so critical. But for us to wait for until a fair value gap is confirmed, that's what makes us even lose money, because we are not patient to wait for maybe from Monday, because we could have anticipated a bullish week. But as of Monday to Thursday, that wasn't actually happening. It came to happen on Wednesday, right? So I think patience is really key, and at this moment in time, that's where we could have gotten good trades going higher, maybe got involved. Price now respecting fair value areas, have a trade there, nice stops, and maybe target the whatever you were targeting higher, or a 1 to 2, then that could have been met. So that is really critical, having context area, and if they're not respected, better wait. So yeah, that drop off, which I told you, this drop off lower that rallied to sweep the weekly low and then we expanded, would have been actually avoided, because you are more favoring of bullish prices. Even though you we could have taken an L at this point in time, because we could have targeted the fair value areas low, right? Because of this price action over here, I could have actually targeted this, but from what level, from what context? Yes, maybe that IR, because sometimes hindsight is clear, but whenever you're trading live, it's so challenging. So yeah, we have to consider either way. So if this IR could have been respected, but also displacement with fair value gap of the lower time frames, that is really key, because we can see this move and say I could have maybe gotten this, but you can see nothing really much didn't really displace towards this direction. We only consolidated, then later on we pushed with the real intention, and the final target was met. So coming to this week, if we go back again to the weekly, oh my, all right, coming to the weekly time frame, the fair value area, if I can now get rid of this, because we talked of it, and then the market, you can see the next week we impulsively moved, and I guess if the market moved as of even Monday, continued higher, we closed so heavy consolidation week with a consolidation fair value gap. Most of the time these consolidation fair value gaps are left open. A good example is this: when we have a long week and the candle closes above the high of the candle, that's what we call a consolidation week. Consolidation fair value gap, they are not most of the time traded into, so somehow we can also expect not to see this, but I'm saying it's low probability, but it's also possible. So with this, if the market is going lower, I want to see how price reacts to this point. If we see displacement with fair value gaps, then we can target those lows. If we don't have anything, we don't have displacements with fair value gaps around what area, around this we will identify from the daily. But if you are bearish, want to see displacement with fair value gaps of these previous week's high, and if we see displacement with fair value gaps, we can expect to see that weekly high being taken. So with that, fall back onto the daily time frame and maybe see the context area, have another context area. So this is on Friday, right? And if you are bearish, want to see maybe markets, because we are ranging, these are other ranging conditions. I want to see if price displaces of that daily IR. I need to align that daily IR, and we are in a consolidation conditions. You can see wicking a lot, engulfing candles not being respected, bearish engulfing candles formed, bullish engulfing candles being formed, so not ideal. So we need to see a breakout of either the high or the lows for us to engage, and with that I need the 4-hour to show me the real displacements. All right, here we have prices. So as of Sunday, what we can see is price didn't really trade into that fair value gap, and we have only swept these lows, as well as we have already swept the previous week's low as of Sunday. So since it's also a major liquidity pool, want to see how price reacts to that weekly low. Could we expect price to displace higher after sweeping the low? Because the previous example I'll show you is we swept the previous week's low and rejected high. Could we reject with fair value gaps pushing high and anticipate to see whether price will be pushing towards those highs, or could price displace towards lower and expect to see this fair value gap being traded into? So at this point, it's a critical point to wait for fair value gaps. pushed back, didn't form any fair value gap, consolidated, didn't form any fair value gap, dropped. Want to see until a moment we have a fair value gap, until a moment we have fair value gaps, we have a drop back, wait for the next candle, we have a fair value gap that has been confirmed, a bearish fair value gap. When was this? Monday 20. So we can see how Monday traded, because at around 8 p.m. it's nearly to that candle opened at around, yeah, Monday had already closed. So what we can see as of Monday is we swept the previous week's low, but we rejected. So again, we expect the next candle maybe to continue, because I'm more of bearish, but what I want to see is fair value gaps being respected. So wait for Tuesday, and here we come at Tuesday. Want to see how will price react to this. Remember, I want to trade the New York session, so at around 8, so I will play that. Market disrespected the fair value gap, and that was at around midnight to 4, then 4 to 8, then the market dropped lower. We don't have any displacement with fair value gaps. We are back to this zone, which was the weekly, yeah, we had this weekly low, weekly high. We had the fair value area. This was the fair value area that price was also forming shortly. It's around midnight, and I'm wondering why my my window is shaking. I don't know whether we have someone around. It's all right. So we are back to that weekly fair value area. We have a weekly fair value gap, but neither side is placing to go either high or lower, because no fair value gaps being formed. We continue playing market deliver towards those lows, but want to avoid consolidations. So fair value gaps are really critical. So price currently, since we have that fair value gap in close proximity, and we are in a bullish market. So the other thing is, whenever we are in a bullish market, I shouldn't really be trading against the trend, even though it's really exciting. That's one thing I've learned, not really trading against the trend. So at this moment, we are in close proximity. What we want to see now is us staying into this fair value gap, and then wait for a reaction going higher. But let's see, price pulled back again, consolidated again, pulled back, and I guess today is on Tuesday, and I guess we'll be closing at that point in time. No trade also would have been taken also on Tuesday because of those ranging conditions. So what could have happened as of Tuesday? Market back into that IR. We have a fair value gap, which maybe as of Wednesday we might see a sting. Then watch how price will react to that point, if we will be bullish or will be bearish. We have lots of liquidities resting above that point. So if we are bearish, then if we are bearish towards that fair value gap, then what is my context area? I need to pick this, which represents the IR. I will be watching how price reacts to that pink line, which is the IR. All right, at that point in time, what you're seeing, price seems to be now delivering higher. We have this level which should push prices lower. It's on Tuesday. On Wednesday, we want to see price maybe displace lower towards this fair value gap, because we are in close proximity. Price boom, sharply delivered lower. We are kind of respecting that. Then again, boom, sharply we are back. Haven't really traded into that fair value gap. We swept these lows, which was Tuesday's lows, and now we have a small fair value gap. We have a small fair value gap around this area. Will that fair value gap push prices lower of this context area? Because we are currently below that immediate rebalance. We want to see reactions of that, but that didn't happen. We again haven't really tapped into the context area, and we are displacing higher. We have created a bullish change in state of delivery, and oh god, I see price, it's around 8 a.m. Again, wait for fair value gaps. Now we have a bullish fair value gap, which is a sign which is disrespecting these daily immediate rebalance. But with this, won't hurry with this first fair value gap. It's around 12. Want to see, will this fair value gap be respected, lead to another fair value gap, consolidation, next 4-hour candle, then drop lower. I haven't really traded into that. This is on Wednesday. Again, nothing really super. If you wait for the 4-hour to give you clarity to engage, then that is ideal. So off the daily, what you can notice is as of Wednesday, we only swept the Tuesday's lows, and then market rejected higher. And now want to see if we are bullish, watching for displacement with fair value gaps towards these higher end. Remember, we have swept the previous week's low already. So we are at this key level. We have swept also a PDL, which is also a major pull, which can cause the market to reverse. So being open-minded. All right, my network. Right, we are back. We have that fair value gap. Will this fair value gap lead to another fair value gap? Then market displays higher, didn't even tap into that at this moment in time, which is on Thursday 00. We have some nice displacements, which is good to see. And also around we had swept the PDL. Now we have shifted, created a change in state of delivery. We have created a market structure shift. Now could price push towards these all-time highs? So at this moment, because we have that displacement and it's a clean displacement compared to all these other one, at this point in time I can drop onto the 1-hour time frame. And see where price is likely to react off of. So we are bullish, and I'm expecting sharp and rapid movements going higher, and we can read that now price is shifting bullish, change of sweep of liquidities, change of character, market structure shift, displacement with fair value gaps. Now I want to see a 1-hour fair value gap being formed at that point in time, and after that has been confirmed, now I can look for a trade opportunity. But where can my stops be? Is it likely that we see the market deliver to this fair value gap? To me, not likely. And these, I don't want to trade the New York session. I want to trade I don't want to trade London, so I wait for the New York session to print in at around, okay, there we go, at around 8. So at around 8, what you can see, if we can go, how many candles have I printed? We have 1, 2, yeah, I will sweep all these, the red one. All right, there we go. And ensure to check how the 4-hour has printed, whether it has confirmed the 4-hour fair value gap of which we can maybe try to look for an opportunity. So we have that for our fair value gap, which I can mark up at that point with black, and we have a clear target with lots of liquidities resting there. And also I can mark up the immediate rebalance too, and see yeah, price is at that immediate rebalance. Play one more candle. We had us thing into the 4-hour time frame. Now what I will be watching for, if we close about above this point in time, then we can engage with price going higher. And with that, I need to drop to the 15 minutes time frame to see reactions of that point. And since we are in the New York time, New York session, oh no, that's too far, man. So need to go back the 4-hour. And need to look for that price action. Maybe at that point in time, yeah, we had that fair value gap, and price rallied deeper into it. Then with that rejection, we tapped. What you can realize is price turned into that a fair value area. Confirm that fair value area, if because 1 2, and you can have it at 1 2 or 2 3. So 1 2, if these are assuming this is higher compared to this, so we use this higher one. So 1 2 and then 3. So market tapped into that IR, a fair value area. Let's see clearly from the 1-hour time frame what we could have been watching for, because we said until we had a closure above that 1-hour 1-hour candle, bearish candle, that's when we could have maybe gotten involved. So at this moment, this candle, then the next candle dropped, we formed a fair value gap, and then off that 4-hour fair value gap, immediately we formed this other fair value gap. I think this was the ideal position to have entered, which was late on Thursday, right? We were looking for a position during the New York time. That didn't happen. We found a fair value gap confirmed late on Thursday. So I think the ideal trade position for me, or how I could have taken that position, was a long position. Maybe after that fair value gap had been confirmed, and where were to be my stops, ideally should be below maybe these rejection blocks. And can it give me a 1 to 2? Yeah, could have given me a clear 1 to 2. So yeah, at that point in time, that's where I could have had my stop losses below maybe this rejection block. Then what could have happened, price pushed back, ranged a lot. But if I observe the 4-hour and play off the 4 hours so that we may close, but also this is a ranging week, because we've seen as of Tuesday nothing really much happened. And then what you could see, price formed a bullish engulfing candle, that fair value gap, this bearish bullish fair value gap led to this other one. So I'm expecting higher prices consolidated, pushed, and then dropped again. So this would have been a loser, a losing trade. Full TP wasn't actually met. And what happened of the lower time frame? Let's try to see what happened and at what time. So at this moment we had Friday New York session opened up, dropped nicely, then we reversed lower. With that reversal, I think, did we have any news event? That trade could have been a loser. And to what levels did price drop to? Okay, that was Friday, and then we'll be looking if we don't see displacement. At that point, market started forming bearish fair value gaps, and if you have bearish fair value gaps, definitely disrespecting this bullish one, we anticipate price to drop towards this level. But let's see whether that happened. We haven't traded into that fair value gap. We traded into it. Should we drop? Because it should serve its purpose by dropping lower, drop lower, right? Another fair value gap that didn't form. And here comes Monday. And before Monday, want to see what and how the weekly candle closed. You can see the weekly candle consolidated that week. Didn't really expand, going higher. And now, since that candle had closed, that week had closed with a -1R, yeah, because we took a trade on Thursday, but that wasn't ideal. We rallied back into these into the fair value area. Now this will be our ideal. No, we had that week. All right, so this is our ideal, a context area of which we'll be watching for reactions going lower to that fair value gap. If it fails, then we want to see how price reacts to it, and can we push, or could price push going higher. Now this is the high probability week that we were talking about. So at this moment in time, we have these immediate rebalance week. So we want to see Friday had closed with that candle, because we see that this was on Monday midnight, meaning price has stung into that immediate rebalance, which we want to see reactions of going lower, but that didn't happen. Market reversed, we dropped, have now a market structure shift. Want to see fair value gaps being formed, and this at Monday New York time. With this New York seeing that change in a market structure shift, I could drop off to the lower time frame and see what is happening at that moment in time, if we have fair value gaps that we could react with going higher. Okay, so we are forming fair value gaps that are now being respected. Also market structure shift, I need to wait for maybe a fair value gap of which I can look for an entry. Market didn't form one, pushed back higher to then another change in state of character, change in state of delivery, price pushed higher, and we didn't really confirm a fair value gap at that moment in time. Now I need to go to the 4-hour time frame, not 2-hour, man. Needed to tap the 4-hour. Boom, 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 boom. All right, needed these 4-hour. Okay, price didn't really expand. What we're seeing, dropping, rejection, then pushed higher, another one drop. So it's on Monday, and the 1 hour doesn't really have anything much. Some consolidation as the market is moving higher. And let's go back. What's the time? Its time is at 18. Let's go to midnight and see. Price was dropping. Now I want to have this one off because I want to see how the daily printed. So Monday has closed. I don't think Monday is even an ideal trading day. So Monday closed, which isn't actually ideal. Let Monday give us the direction. So what we could see is as of Monday, this is on Monday. Monday didn't print that much, has no any further information, but we are disrespecting the weekly context area, which was to push prices towards this fair value gap. That's the only sign that we have. Now we need the 4 hour, maybe to clarify things up. Should we go bearish or should we go bullish? But as of the daily is kind of confirming a kind of bullish scenario. And if you are bullish, want to see market closing above these up close candles, and that is during the New York session. Market pushed, consolidated, then again later on, damn. So with this candle, I want us to see what would have happened. So before the New York time, around 4 to 8, you could see the market displaced above this point in time. And now we have to identify, we have disrespected this area. Monday has already confirmed we might be pushing higher. We have disrespected this fair value gap. Now we have all those liquidities resting above there. Then what should be our context area? Fair value area as usual, and is in line with the immediate rebalance. So we'll only have that and see, could price deliver really to that level of the 1 hour time frame? That's deep. To me, it's kind of low probability. Maybe consolidate for the next candle, then push higher. So I think as of Tuesday, we had a news event at that point in time, but price pushed nicely, giving some clarity of also a fair value gap. So I think at this moment, wait for the next candle to print, maybe to confirm a fair value gap, then engage. We dropped lower to that context area, and of this context area, can price react off that and expand higher? We need to see whether we'll be having fair value gaps of the 15 minutes time frame going higher, that fair value gaps leading to other fair value gaps. We have tapped into the context area. Now watching the 15 minutes drop, nothing really happening. Drop, nothing really happening. We have how many candles have I printed? Let's go to the 1 hour and see what is happening. What is happening is price at that fair value area, we stand deeper into this range, and this is where I think one thing I'm failing to use is premium discount. Market always moves from premium and discount, and that's what I think should be very key. Also, price delivered deeper into discount, right? No fair value gap had been formed going higher. Then that candle closed bullish because we are expecting bullish prices. Remember, don't get involved in bearish. And also the first analysis is always the right analysis. That's what I'm realizing, not shifting. You can see market was kind of deep at this moment in time, but someone could have maybe said we are going bearish. But at this moment, maybe we were sweeping these liquidities into deep discount and then push higher. So of that, market now starting to displace around above that area. Want to see a fair value gap. Now we have a fair value gap. How price reacts to it, didn't really tap into it. So that's why it's always ideal for me. Immediately a fair value gap is formed, I just enter, other than waiting for the market to sting into that fair value gap. So at this moment in time, because that one has played out, maybe coming after 15 minutes to the chart, so I will have taken a long position immediately this candle closes, even though we have a fair value gap, and ensure that my stops, my stop loss is below the prior swept lows. We have these lows that had been swept. That's where I will have them, and and where can I target a 1 to 2, and sometimes I can have a 1 to 2 and also ensure that I've held a long position towards my final target. What's happening around this point? Where is my final target? I'm not seeing that. So of the 1 hour, yeah, deep discount, yeah, we have those liquidities there, and also all-time highs. The market pushed, rejected from the 1 hour time frame, but also we are following the plan, bullish prices. The good thing, we are above that context area, and we have one more candle before the 4-hour candle. We confirm that bullish fair value gap, 1 hour bullish fair value gap, and now going back into the 4-hour to see what price did there. We dropped deeper into that range. And that's why it's not always, whenever you see price dropping, change your bias, maybe stick with your first bias, and then off there maintain your position. Now we can expect a push higher, because at around our entry, that's where the immediate rebalance is for the 4-hour time frame. Now if we are wait, we have that 1 hour fair value gap. Could we expect a drop into that? I would have maybe added another position at that. Immediately the candle closure and stop loss would have maintained. Maybe that would have been a long to hold trade. And at this moment it's around 11 p.m. ideal time, consolidated around that point, consolidated. If I reduce the speed of this, then the market pushed, and this was at on Tuesday. If we play to that midnight candle, all right, that point, we are in profit, and trying to observe the daily time frame. Daily is ideal, and we have the IR possible context area for this day. It's around, we could expect maybe the market to go deep okay, that end. So we have this zone here, which could maybe possibly the market could possibly sting into, then reject. But is it possible also, if we monitor the 4-hour, is it possible that we drop onto the 4-hour IR, then we daily IR, then we continue higher? To me, not really, because the 4-hour is respecting what we saw, bullish engulfing candle being formed this point in time. So I'm either expecting the 0.5 level or the immediate rebalance, and then a continuation higher. Then we had that push higher on Wednesday, a drop towards our SL. This was on Wednesday, 4 a.m. right before the New York session. So we had our first trade hit our SL, and then off there the same bias still remains. So at this moment in time, I should have, what could have I done better at this point in time? Maybe it was an unavoidable loss, by the way, could have been taken just out. Maybe you could have ensured, other than the final loss, with that nice displacement, stop losses to break even, right? With that push higher, I would have ensured with the break of this structure, this high, stop loss to break even, then maybe could have avoided that loss. But also, if I could have watched the daily time frame, I would have maybe kept my losses, my stops there, and maybe had these IR as my context area, of which I could have maybe waited to see whether price dips into it. So one thing, it was to me a very unavoidable loss, and not really a good loss. But also, where were my stop losses? Below that swing low. It works, but at this moment in time I was caught. But the same trade with that position, seeing we have displacement with fair value gaps again. This is on Wednesday 23rd, and do we have any news event at this point in time? We're gonna check on Wednesday, September 11th. If we had CPI, then that could be September, was it 2024? Yeah, 2024 September. We had CPI, which we should have avoided before. That's why I guess the market did that manipulation. Then maybe later on we have the real expansion. So I guess with that I should have, if I knew we had CPI the next day, then I would have moved my stops to break even. I don't usually love to trade CPI, sorry. So my bad. And that was a trade to avoid. So if we could yeah, so we were taken out at that moment. Maybe wait for the 8 a.m. candle to close there. So that candle, after the manipulation, now try to look for expansions going higher again after the CPI. The main thing is after the CPI. My bad. So after that, we had that fair value gap being confirmed after a sweep of those liquidities. And also, if we have this flip from the high to the low, what we could see, price are delivered to deep discount, and now we were reversing higher with fair value gaps. Now this was the trade. Immediately this candle could have closed, my stops being below these lows that would have been swept, these ones, these liquidities, and other than that low, and ensure I'm targeting a 1 to 2. Then let tap into that fair value gap, consolidated a lot, kinda in drawdown, which could have made me ask questions, why this? But would have held strong. should have held strong. Okay, when was this? Because Wednesday has closed. We are about to close in yes, Wednesday has already closed. Now I want to see how the 4 hour, the daily candle had closed as of Wednesday after singing into that IR, and now that was the context area. Now if we have displacement above that level of the 4 hour time frame with fair value gaps, then that's a level to engage with higher prices. So the 4 hour of the immediate rebalance, we can see there price pushed. We have that change in state of delivery after the trade had been taken, and now price pushed higher, confirmed a 4 hour fair value gap, which is ideal if we want to go higher. Staying into that fair value gap, market displaced. Finally, that trade was hit the TP. So yeah, prior to CPI, avoid trading that, because we can see manipulation like this and just align. After that, align with the direction, and that was delivered. But you could see as of Monday, this was Monday we consolidated, but you can see the market's real intentions were bullish compared to the consolidation weeks. So as of Thursday, if we play really fast, the market just continued expanding higher, and later on during because Friday continued bullish, so we could have even gotten a 1 to 3, which was really quick. But because these were the all-time highs, I think 1 to 2 is ideal at a point where I will be my TP will be taken and I will be worrying less. So that's how you differentiate high probability weeks and low probability weeks. And how can you identify low probability weeks is when we have bearish fair value gap that do not hold through, right? And also bullish fair value gap doesn't do their jobs. So this fair value gap or we don't have any bullish fair value gaps, and this fair value gap didn't do its job by pushing prices higher towards these highs or running through these highs. But what it did sweep, then we formed a bearish fair value gaps. Those are not high probability scenarios, but in weeks like these, that's when you get the real gist. So we can close the long video there. Hopefully, if you're here with me, hopefully we can learn together, and hopefully you had something of this.